Live streaming is on.
All right. Good afternoon, everybody. Event trader Gavin McGuire here, and we are joined for the options playbook by none other than options trader himself, Brandon Mars. So, Brandon, how are you doing today?
I'm great, Gavin. How are you?
Doing good, doing good. Just posted the Fed preview there, so getting ready for that tomorrow. As I said in the preview, I just kind of view this as a non-event, and people should be continuing to focus on stocks here. Out of curiosity, Brandon, let me just ask you, since we've got the topic up right now, um, does the Fed days impact your options trading at all, and if so, how?
Yeah, so in the morning, you tend to maybe get a little bit of that choppiness. So sometimes you might not always have the best options trading in the morning. Maybe put a little asterisk on that idea for this Fed meeting in particular, just because we have some of the big tech earnings after the market today, which I think could, I don't know, maybe spice things up a little bit in the morning compared to other Fed meetings. And then heading into the meeting, I've talked about this a few times in my notes. I mean, the Fed meetings and options just get really wild. I mean, you can go
For,
from
for like the Qs and the SPY, you mean, or just even individual issuances?
everything really for the
Yeah.
most part. I mean, I've had times before where I've been up 100% on a trade that's gone to almost a full, 0% to, back up to 100 in 15 minutes. Or I've also been in trades that have basically been losers that have gone to 100% back to losers in 15 minutes. So pretty wild. I try to maybe lighten up a little bit into the meeting just because I think it's pretty hard to kind of manage multiple positions when the algorithms are just going wild. So that's usually one thing I'll do, and I usually maybe try to just take one lotto into the actual meeting based upon kind of what I'm feeling is the potential direction. And then the main thing, and I've talked about this a bunch, is I'm usually a little quicker to take profits. You might end up losing out on a 10x, frankly, if something keeps running in your direction. But it's really painful to be up 100% on a trade in a couple minutes after the Fed, and then just all of a sudden have it vanish because an algo kicks in or Powell says something at the press conference and they drop it back down. So yeah, those are a few of the things. And I guess on that note, I've mentioned this multiple times. Anytime you trade into the Fed meeting, just be careful. You can really lose your shirt or make a lot of money very quickly, but it's not always necessarily easy. So maybe lighten up your position size and just take some caution.
Do you focus on rate sensitive items like home builders or anything like that, or does that not really factor in?
I have in the past. I've had some luck in the past trading the financials into a Fed meeting. If I thought that they were going to be very hawkish and we were going to see a spike in rates, again, if you get a huge spike in rates, you might smoke the entire market and the financials might not be spared. But in times in the past, yeah, I've had some luck taking some call options on like a JP Morgan or a Goldman Sachs into the meeting. And then yeah, if you really think that Powell's just going to come out swinging, and I don't think he's going to do this, but if you're like thinking, all right, he's going to raise it 50 basis points and sound so hawkish, yeah, I would look for something like a high growth tech name to maybe take a put into the meeting.
All right. Speaking of the markets, Brandon, I know we're talking about um, being a little surprised that we're not seeing more profit taking going into this Fed meeting. I'd be curious if people are kind of the same mindset that I am here. Also, real quick, scalp taking the remainder of his profits on his firm trade, good for about 80 cents. So, scalp traders out there. But sorry, circling back here, I know we were both talking about kind of surprised that the market isn't looking more at some profit taking going in. So, just kind of curious as to your thoughts on the broader market at this juncture heading into the Fed meeting.
Yeah, and that's probably a good segue. And I know that somebody had written in about the QQQ trade that I took. So you kind of like you just said, a little surprised that there wasn't a little bit more profit taking. And I took that trade after Jim was talking about the iceberg out there, and we actually saw some fairly decent selling kick in, and I just frankly thought that we had maybe a little bit more to the downside, and then it is just purely melted up. I thought that we were maybe going to start looking at just testing like the 20-day moving average on like the mini NASDAQ or the QQQs. Again, wouldn't be a huge drop if we went down to the 20-day. I think it'd only be a couple percent at this point, but I thought with where we were going to maybe at least test that. But these computers have just been really set to buy over the last couple of days. So hopefully it's not a rug pull before the big tech and Fed.
Yeah, I mean, what I could see playing out of this juncture is this. Just you saw Google and Microsoft both roll over a little bit, right? And I mean, nothing aggressive, obviously, especially given the run. So I feel like the profit taking in the mega cap, for the most part's taken place. And therefore, they're kind of able to um, keep these markets afloat, at least the Nasdaq index for sure. But even with the reweighting, and so they're sitting above the 20 right now. It's going to be a key factor going into trade. Nasdaq itself sitting right above the 20, which also did shortly before the last Fed meeting. And what I kind of see playing out here is most of the profit takings happened, and now you got a lot of people kind of trying to sneak in to get short with the idea that you're going to see a little bit of profit taking going on. And I think that might be a little too late on that. And if Microsoft and Google post strong results, then which it's not out of the question, right? I know there's high expectations, but that sets off a squeeze there, and then you get the overnight activity kind of following suit. We know the China stimulus stories out there. Europe playing a little bit of catch up going on, and you could get a hot market coming in tomorrow, which might, at that point you probably have a lot of shorts throwing in the towel and stuff. That might be a little bit of a better opportunity, I think, to short the Qs. What's your thoughts on that?
Yeah, no, I would agree with you. Again, going back to just my trade, which unfortunately just frankly was right for about 10 minutes and then wrong. I was looking at that one in particular on a little bit more of just an intraday basis where I saw some heavy selling coming in. Once you start to see a little bit of that, it's like, oh, maybe we'll get a little bit more of that profit taking. And, I saw the volume coming in. So I like the trade, but yeah, I like the setup in the theory that you have. But, again, just back to mine, it was kind of more of just what I was seeing on an intraday basis, and, took a quick small shot, and unfortunately, if I didn't take profits in the first 10 minutes, they quickly went away, unfortunately.
What would be your ideal setup for tomorrow in terms of the indices?
Oh, that's a good question. And I usually like to play a little bit of conspiracy theory with the
Sure.
market makers and the Fed heading into it. I'm actually not a conspiracy theorist, except for when it comes to the market makers.
Well, you've worked with enough of them, so you should know.
So, for me, that's kind of going back to your original question on trading into the Fed. If we got that squeeze that you kind of just mentioned from some good results, and all of a sudden we head into the Fed and everything is just, zooming higher, I'd almost maybe be inclined to take a put in that case, because what I'm thinking there is no matter what Powell says or does, they're going to bring the market down so they can reload, so they can continue that march higher. So that's kind of sometimes how I think about things. And it's funny, in the past, there's been certain times where I'm just like, all right, the market's just zooming. the market makers need to reload, and Powell can say whatever he wants, and the market ends up moving in whatever direction they kind of need it to go to reload. So that's probably how I would think. If things were moving really higher tomorrow, if we got that squeeze, if we end up getting maybe not the best results, and in the morning we start to kind of trend down, I would probably look for some signs of accumulation, things like hammer candles and stuff on some of the individual names and the indexes of signs of accumulation, and then that would probably make me lean towards the call side, to maybe get the squeeze that you were talking about, maybe just a little bit later though.
All right. Let's talk about some of the names that you've put on the radar this week. And I think we talked about your Qs. AMD is the only other trade that you have out there right now. Am I right in that?
You are correct in that. And
on Friday,
unfortunately,
108 puts around 194. It's trading up at 112.72. But again, stands as an area where you could see a little bit of a rollover, certainly some poor earnings and stuff. So I like the call here. Where do you stand with this trade right now? Are you just basically holding it going into these earnings reports in the Fed?
Yeah, unfortunately, timing, that one's a little bit underwater too. Again, I kind of came into this week thinking we'd maybe see a little bit of profit taking, entered into the AMD yesterday. Unfortunately, I don't know how much of an effect this had on it, but it might have picked up an algorithm or two. But there was a Barron's article that came out on AMD shortly after. Probably didn't help me a ton, probably didn't hurt me a ton either, but still a little annoying when the news comes out randomly. But yeah, I saw this one last week. You had a pretty big down day on the 20th, which was Thursday, and then you had an inside day on Friday, and it would really just kind of accumulated towards the bottom of the mother bar. So thought I was going to have a nice break below that, and actually we got that yesterday, and it was really quick, and then it just hit some key levels, and it bounced. And again, probably a mention in Barron's didn't help my cause, but that is what it is. News happens.
Yeah, it's always annoying when you got a trade position on and then you see like some short report guy coming out. You're just like, oh man, come on. But Barron's being another one, of course. So the two that you had thrown on, one of potential. This is just Monday, and we'll get into the AMAT one as well. But you got three on your radars right now, so just curious to see how they're folding out. One being Micron. Yeah, this potential call long. So any updated thoughts on Micron?
Yeah, so that trade would have worked out really well if you took it in, again, we've talked about trading options in the first 30 minutes. That would have worked out really well if you took it right at the open, and I think you had about a 30-minute window before you would have wanted to close it. It's still kind of building around that 50-day on the daily chart, which I like. I didn't love the big long wick at the top of yesterday's candle. Not a complete deal breaker, but the longer that thing kind of coils there, again, I think this would probably be a pretty good candidate if we do get some continued strength in the tech world, and if the semis are looking pretty strong today. Micron's lagging a little bit as I look at it, but I think that still definitely has potential to kind of springboard higher off of that 50.
I was just thinking Long Wick. That'd be a good name for a trading room instead of John Wick. Go with Long Wick. But but I digress, Brandon. So there's Micron. DocuSign was another one. You had this one on the potential short radar. You want to give a little bit of updated thoughts on DocuSign?
Yeah, so actually DocuSign, if we do get some selling selling in tech. I mean, DocuSign's slightly in the red today. So, in theory, if we did get any profit taking or a pullback on earnings, this would probably be a pretty good short candidate. So, looking at the daily chart again on Thursday, we've got a pretty nice little down day. Actually, a Marubozu candle. So essentially, all selling for the day in theory, just because it opened at a price and it closed at the very low, and you can see it's just a big solid red bar. And then the last 3 days have actually been inside days in the bottom half of that big candle and just kind of hanging on to that 20-day. So, if we get some pressure, that'll put it below all of the moving averages. If it can break that 20-day and breaks 3 days of inside days. So, yeah, I would actually kind of keep this at the top of the radar. And again, I'll put a big asterisk there that we need tech selling to return, which we're not seeing as I speak.
Right. And you actually had also mentioned Walmart just kind of loosely on that one. So, any updated thoughts on Walmart?
Yeah, so with Walmart, I mean, that was a great setup as it broke that inside. It was like 8 straight days that it had an inside day. Real nice break. And then, in my notes, I talked about how it would, in theory, once you get to a level like a 157.5, 158, where it was, and it's got that good technical break out of multiple inside days, just in theory, you're going to probably go and test that next round number, which would be 160. And it did. So ended up being a, nice short little move, and then hit 160. That candle's not shaping up to be the greatest today. It's looking pretty bearish, engulfing. So, again, it's still a good looking chart. Personally, I probably wouldn't go and jump into it until I saw, maybe a couple days of consolidation, just a little bit of a breather after that run.
All right. Let's see. And then there's AMAT, AMAT.
Yeah, so this one, obviously, again, with the semis being strong and tech being up, doesn't make a whole lot of sense, but it did have a double top on it. So if we did get some selling, I did think that it would return lower. And, again, I put in my notes that I would want to see it get below the 137 level. Which was basically the bottom of the double top, and it didn't even get anywhere close to that today. So, at least for me, in a case like that where it doesn't even get close to the potential level that I want it to break below, I kind of put it on the back burner for the time being.
All right. So with that, then we will move on to our discussion for this week, Brandon, which obviously last week we talked a lot about trading options going into earnings. Obviously, that could create a lot of volatility. We went in depth on that. If anybody didn't have a chance to listen to that, I'd highly recommend you go back and give it a listen to, because this is basically part 2 of the discussion that we're going to do on that. And that is looking at options and trading options after the stocks have made their moves. And in particular, we're going to take a look at some of the big gappers. We talk a lot about earnings gaps and kind of how to trade them. So Brandon's going to talk a little bit about them from an options perspective. So really curious to hear his thoughts on this. But Brandon, why don't you kick off the discussion here, talk a little bit about gaps, some of the basic things that you notice about them, and then we'll start doing a little bit of a deeper dive into some actual real life examples here.
Yeah, so no surprises, especially with like some of the big tech. You get your earnings announcement, and based upon the results, you're generally speaking going to find a big gap up or a big gap down. For me, when I see those things from a options perspective right after earnings, they can be very tricky. They create these gaps to, in a couple cases, it just has to do with your basic buying and selling demand. The earnings results, were they great? Were they terrible? But another thing that they do is they use gaps to essentially kill off some options premium and to frankly to draw people in. Even if it's not earnings, you talk about seeing some sort of news gap, and you talk about the first like 5 minutes of trading. How many times have we read this great news article and oh, I got to get into this stock, and the second it hits 931, you're buy, and then a stock trades flat for the day. So it's not just earnings that happens. But in particular, you do find larger gaps after earnings, and you kind of have to be, a little cautious with them when it comes to entering into an option, because sometimes you're going to end up getting an all-day consolidation, and what they'll end up doing is they'll draw you in with the big gap. I got to get into this. What a great earnings report. You buy your option, and then they let it trade flat all day. And basically what they're doing is they're killing off of your call premium. So, that's not always the case. Obviously you're going to get some of those stocks. I think maybe Meta, I think it was last quarter, might be a good example. I mean, it just climbed all day long, and you would have still made some good returns on your calls if you had entered into it right at the open. But more times than not, you are going to find situations where you'll get these gaps and consolidation, and you just need to be careful on your premiums. And then, later on down the road is actually almost where I kind of prefer personally to find some of these big gappers, because I think they ultimately lead to some better setups down the road. So, Gavin, I don't know if you want to run through maybe a couple of the charts right now, just so I can kind of show a couple of people, kind of what I'm looking at in regards to the gaps.
Yeah. So you gave me a couple of examples, so I'll just go in the order that you provided them. One, Schwab. Just a reminder, I do have the long still out on Schwab. And here you go. We got earnings out on Monday, the 18th. It was, or no, was it Monday the 18th? That was out on, it was definitely Monday morning, right? So it came out on the 18th, had that big pop from 57 up to the 64 area, and been able to hold up here, Brandon, right? So just kind of testing around the 200-day moving average. So from what are some of the aspects you're looking at in this report, in this price action?
Yeah, so really one of my favorite post earnings is to find really a candle that gaps up and is basically a full candle of either selling or buying, and then creates really a flag pattern. I actually went through all of the earnings reports from recently, and just because we haven't been in earnings that long, I wasn't able to find one exactly how I liked. And then actually in this environment, I noticed that a lot of stocks are just gapping up and then continuing to keep going up. So no flag patterns were created, but this was kind of a close example. So you get that move up. I always like to look in the case here of a call, not seeing much of an upper wick. So if you see a big gap up and then you see some sort of really long upper wick, that definitely is an indicator that there are some sellers lurking out there. In the case of Schwab, you don't really have a big one there. And then you got a nice, couple days of just kind of your sideways consolidation, kind of just right around that 200-day moving average. So I would be looking for that to break out above that. And at that level, you would think it would probably test 70 and then even potentially go up and close that gap that it has from March 8th. So kind of as we talked about, one of the challenges with options, I mean, this Schwab chart, I would imagine that this continues on higher, but it's a matter of, does it consolidate for, is today the last day of consolidation, or does it consolidate for another 15 days? And, there are things that we can watch for on the chart, but it's not always a perfect science. It can be a little hard to time with the options. From a share perspective, this would probably be a pretty good trade too. But, for me, today might actually be kind of the key, because it looks like they're making it dip down a little bit, which is sometimes the head fake before they let it go higher. Again, no guarantees, so please don't just go and jump into this thing. But I definitely like the look as this kind of starts to coil around that 200-day for a potential move up to 70.
Yeah, I agree with you. And I mean, just from my perspective, this is how I look at it. Been doing earnings previews and stuff for the last 20 years here, briefing. So I follow earnings reactions pretty closely. Do you ever look at the T+2 for the idea of just kind of giving it 2 days to clear out? Basically, the way I always see it, this is more for gapping down, I would say, but also for gapping up, Brandon, where it takes, especially on the downside, 2 days for people to kind of just be like, okay, I'm throwing the towel on this. So you rarely get that bounce right off the bat. And, it usually takes a few days for those sellers to really clear out. Here, it's obviously the flip side of that, where you got that pop into 200-day moving average. And it feels like buyers are looking for some sort of signal to get in above the 200 range. And we haven't seen much ability for it to hold up above that range right now. So now you're coming back down towards the island bottom, which we got right around 63, 64 even. So, I mean, do you get the feeling that they're just waiting for a test of 64 and that's going to be the head fake and launch them higher? Is that kind of how you'd be looking at it? Or are you okay with maybe getting in here and then having the idea that if it breaks below 64, then I know I'm wrong, and that's the falsifiability there?
Yeah, I mean, seeing kind of that head fake down, and in a situation like this, I love to see it just kind of like move up, and then you see some sort of like big hammer candle or inverted hammer candle on high volume, and that's one thing that I really like to see. I don't know if we'll get that here. I would say if it went to 64, I'd be very interested. This is kind of going back to what we were talking about earlier. This is maybe a potential interesting play on, interest rate sensitive stocks. If in theory we're going to have the Fed raise rates tomorrow and they're maybe hawkish, Schwab, with all the money sitting in their money markets, they could be a beneficiary of that. So this is a potential stock that I would maybe play in that regard too. And that might be a potential catalyst to get us over that 200.
All right. So we'll be keeping an eye out for that. No trades on it yet. You're just kind of watching this, right, Brandon?
For full disclosure, I used to work at an alternative investment firm, and I was the Schwab relationship manager there for years. So I can't trade Schwab personally. I like the setup, but I just can't trade it for that reason. So,
that makes perfect sense.
So it's one out of like 5,000 stocks that I just can't touch.
All right, no, that's good to know. Full disclosure there. Otherwise, you'd probably have that long on right now, right?
Yes, exactly.
All right. Hint, hint, subs. So, okay, next up, United Healthcare really had a nice run here post earnings. This one has ripped up above the 200-day moving average. This is one that I'm kicking myself for, Brandon. I was waiting for it to come down to the 450 level and then waiting for earnings to get through, and it just ran without me on that big bar up on earnings day. So just kind of watching this sail into the midst there above the 500 level. What's your thoughts on the options trading going on around UNH following this move?
Yeah, I mean, that one, like you said, it just ripped higher. And I mean, that was a big rip higher for a Dow stock, that's for sure. So that big candle that you mentioned, though, I kind of wanted to use this one as an example. That's kind of the size and scale of a candle. Ideally would have had no wick at the top for me. And if something like that came back and developed some sort of flag pattern, though, that's my favorite post earnings setup. The market's just so strong, like I said, that it just keeps ripping higher. So it almost just ripped higher, and it's almost like created its flag pattern over the last couple of days here. So, again, I probably like this one where, in theory, if, the Fed was very hawkish and we saw some profit taking on, in the tech world, maybe off of earnings too, that, in theory, you would think that healthcare would potentially be a little bit of a safe haven. So now that it's kind of ripped higher, it's consolidated for a few days here around the 510 area. I'd probably start looking for this to, potentially start making a move towards the 515, the 520 area. And again, I think as a potential safety net, again, there's a lot of what ifs happening in the next 24 hours. I think that this one could potentially be a beneficiary, especially if we see that any sort of selling in the tech world.
All right. Next up, then, we are going to be taking a look at Lockheed Martin, LMT. What's your thoughts on Lockheed Martin here? Aerospace and defense seems to be having a tough time in general. This is a name, Brandon, that I was looking for. I thought that their results were pretty good, and I was expecting a nice move from them. Instead, they reversed down below that 200-day moving average, popped down to what I got as the lower end of the Bollinger Band here, right around 448. So today, another gap down, I guess, on around that Raytheon price reaction there. But that group's been definitely treading water as of late. So I'll be curious to hear your thoughts on LMT.
Yeah, so I'm in the same boat as you where I hesitate a little bit to bet against a good report, but this had a pretty nice chart setup that I look for. This would be more of a put or a short idea. So I was talking before about how I look for that big candle with little to no wick, at the ends. So if you look there from that big candle from the earnings day, there's very little wick at the bottom, and then afterwards you almost get another little dip down, and then you almost get a mini bear flag over the last couple of days, and then I would assume that the Raytheon had something to do with this, but I would also assume that is kind of shaping up to be a bear flag. You get a couple days of consolidation, really. I think just about all 3 days were inside bars. Can't even make it back to its 20-day. And now all of a sudden, if you look back, I mean, this is kind of testing all of that support in the 450-ish area that it's had going back until about April. So again, this could maybe see a little bit of a safety net, kind of like I was talking about with UNH, where if tech got some selling, maybe some of these industrial, blue chip type names would see a little bit of a safety net. But that right there is kind of just hanging on, in my opinion, to that support level around the 450. So this I think is shaping up to be a pretty good potential, short or put. I probably would have had this one on my radar a little sooner, but unfortunately, Lockheed doesn't trade many options. It's only like a couple thousand a day, so it's not always the best options trader. Again, I just kind of wanted to show people the technical setups, and this was one that I really liked as an example.
All right. And the final one that you have here for the samples is State Street, Brandon, STT. Another one that had that big gap down there. This is one of the custodial banks, of course. I mean, this is arguably the most interest rate sensitive asset class out there, along with Piers, Bank of New York Mellon, and Northern Trust. So big gap down there, right to the 65.50 pretty much reversing course right after that, though, and marching back higher, now up to its 50-day moving average. So what would you do in an example like this one?
Yeah, so just like you said, I mean, again, very interest rate sensitive, and obviously that's going to be a big topic tomorrow. So, take caution with this idea. And again, it doesn't even trade many options. I just like the technical setup. I think if we did this at the very end of earnings season, I could have found you about 50 examples. But since
Sure.
we're only a few reports in, I was slim pickings for me here.
Well, maybe that could be something that we're just doing over the next few weeks when we do this options playbook. You grab a sample or two, we can kind of keep coming back and talking about this, because it'll be a good piece too, just in terms of I could jot down these names that we've already mentioned, and we'll track those too. Just maybe we'll both learn something from the closer look, right?
Yeah, no, I think that's actually a great idea. I'm glad you just thought of that. So yeah, this one, yeah, again, you've got that big, ignition candle to the downside. And I mean, there's no wick on that at all. I mean, if you want to talk about seeing selling pressure after an earnings report, I mean, that's exactly what you look for. And then again, has that little dip down, and then it's kind of making in my opinion, it looks a little bit like a feeble bounce. Hasn't even made it back to like the halfway point, or is right about the halfway point of that big down day. And, it sort of looks like it wants to roll over, and, has a little bit of a bear flag type pattern too. So, obviously there's been some strength in the financials, and there's the interest rate tomorrow. So we got to kind of take that with a grain of salt. But, if we have a day or a pullback in the financials and we see profit taking, this one has potential to see some pretty good selling pressure. And especially if it starts to get back underneath the close of that initial big down day.
All right. Let's see. That's it for the samples, right, Brandon? Do you have any others that I'm missing here?
Nope, that's it.
I did want to ask you about F5 actually. That they just reported that nice gap up right to that 164 area, through it actually. That was the 200 weekly that I was pointing out. Definitely ran into a little bit of resistance there. So real quick, I'll throw F5 at you. You got any thoughts on this? Or is this still a little too early in the development of the chart that you like to go from for earnings?
Yeah, for me, that's a little too early because, like you're saying, if you look at that candle, I mean, that's a fairly bearish candle, but it's also a pretty big gap up. So, I personally don't want to bet against it, but I also want to see kind of where the dust settles. So, for me, especially from an options perspective, just because your timing is so critical, I'm kind of just sitting here and waiting. Maybe it catches up to its upper Bollinger Band through, price and time. Maybe it creates some sort of inside day or flag pattern. But for me, from an options perspective, especially, I have to wait for that one.
All right. No, that's fair. That's fair. All right. So let's see. So there are the samples that we had that we're going to talk about there. So any other pieces? I know you had played, you wanted to talk a little bit. We had talked about the end of the week for Netflix. I think it was a couple of weeks ago, looking for at a certain pattern that you wanted to discuss here, right?
Yeah, so the certain pattern was really the post earnings flag pattern. So there was that one, which I just discussed, and then another one that I actually put in my morning notes from Friday is really a gap down. Speaking of gaps, it's a gap down idea, but it's not the day after earnings. So if you get something like a Netflix or a Tesla, so this week keep your eyes on Meta, Microsoft, all those. they got hit pretty good after earnings. So after a big, popular tech name like that's down 8-9%, if not the day after earnings, but the day after that, if you happen to get another gap down, that is a potential time that I would be, maybe interested in calls. Again, I have to watch the action, but if you get a quick gap down on that second day and all of a sudden you start to see some really big volume coming in, and again, like a hammer candle, something of that nature that shows that the buyer stepped in, and maybe you've seen at least a brief pause in the selling, I think that's a great call opportunity. They happen very quick, but they can create some very nice returns, because when you get that sort of short-term capitulation to the downside intraday, you can see a nice bounce on those. They actually did not happen last week, but Tesla yesterday would have been a good example. So it took one extra day, but you've got a lot of selling that came in on Tesla right after the earnings. Then you've got another day of some pretty solid selling. And then you've got really just the volume that steps in on the third day. And I mean, Tesla was up, 3.5-4% yesterday, I think. So something to be mindful of with some of the other names that are reporting this week, because some of these momentum names, and again, they're short, quick trades, and you got to be careful and be ready for them to, potentially move against you quickly, and then to also potentially be profitable quite quickly. But if I saw anything like a Meta or a Microsoft that was down big and then down a second day, look out for that big, buying volume that steps in for a quick short-term trade. Again, I think we might see a little bit more pressure on some of these just because they got hit pretty hard, and it didn't totally damage the charts, but, they added maybe a little element of potential further selling to them with some of the moves that they made.
Well, one of the early characteristics of this earnings season, Brandon, I know you mentioned it in your notes, and we've certainly seen it play out, is a lot of these gap downs going in. So, with that in mind, Microsoft and Google, any thoughts if we saw gap downs there on what on potential actions that you could take? I mean, obviously the reason for the gap down factors. Let's put it this way. Let's say it's your typical small beats and raise, right? Which would be Google obviously doesn't guide, but Microsoft, if we got a small beat and raise and it gaps down on that, you got any thoughts preparing for those reports going in?
I think with how these have moved so much, that I think people are really expecting them to knock it out of the park. So, if it was a small beat and raise and I saw a gap down, I'd probably want to wait until the second day, kind of like the idea I just mentioned. See if you kind of get a bunch of the people that just come in and take their profits, let the sellers get out of the way. And then maybe on day two, if you start to see a little bit more selling in the morning, and then you get that big buying candle that comes in, that's probably where I'd be a little bit more inclined to do so. Now, if all of a sudden, Google comes out and says that their new AI chatbot's gonna generate $100 billion in revenue a month, and for some reason we get a gap down, that's something I'd want to jump on with calls.
All right. Okay, so there you have it. Let's see. Anything else from your notes? I know you had some mentions of Square and Snow here. Did you want to mention them at all?
Yeah, so that was really just kind of talking about, last week we had Netflix and Tesla come out, and obviously they brought down tech. And, I've kind of talked about how I don't necessarily love to trade options the following day in case you get that consolidation or you've got the elevated games. That day I traded Square and Snow. There were just some chart setups that I liked. They happened to be tech names, and I thought that they would get hit along with them. So, there's nothing wrong with going out and trading another name, or it even reminds me going into earnings, like, if you don't want to pay the premiums on like a Meta today, but you think that social media is going to knock it out of the park, well, maybe I don't know, maybe play some call options on Pinterest or something as kind of a different play on that, where your options premium isn't as high. There's not going to be quite as many games on that particular stock, and you can still kind of get some similar correlations. And just for full disclosure, I haven't looked at the Pinterest chart. I have no idea what it looks like or what it's going to do. That just happened to be an example that popped into my head. So please don't rush out and buy Pinterest off of that comment.
Well, yeah, especially Pinterest could definitely move on Google's advertising revenue numbers, right? So
Yes.
keep that in mind. I know they're not reporting themselves, but they might move like they are if Google has a significant news out there. So keep that in mind. All right, Brandon, anything else that we haven't touched upon on this subject?
I think the last thing I just wanted to mention, again, I've mentioned how you are going to get some of those big movers and they're going to create these huge returns, but it's kind of hard to guess. We had talked about this a little bit last week, and having the higher premiums on options and how you have to really get them to move in order to make money. I just wanted to bring up a couple of returns to really paint the picture here. And I'll put a disclaimer on this, that this returns that I'm giving you are basically if you were to buy the option basically right at the close and hold it the entire next day. So if anybody traded Netflix and Tesla options last week, your returns could be significantly different. But if you did go into puts on these right at the close and you held them the full next day, this was essentially your returns. The best put on Netflix paid you about 100%, and the best put on Tesla paid you about 190%. So those aren't terrible returns, but you do take on a lot of risk in order to get that return, because your risk is either of them could have soared, or your risk is, frankly, either of those could have maybe moved 6% instead of 8 or 9%, and it would have basically turned that option probably into about flat. There would have been some returns, but it would have brought your returns down quite a bit. So again, as I've talked about, you take on the two different levels of risk with taking options into earnings, and you took on a lot of risk to make 100 or 190% on your money. So just kind of wanted to throw out that real world example now that I have one with a few reports behind us.
All right, no, that's perfect. All right, Brandon, anything else before we let you get going back to the desk?
I think we covered everything on the list.
All right, no, good stuff. Again, we'll like I said, I will follow up with these names in next week, just kind of see how they've played out. Kind of have a running thought process on them, and maybe we'll figure something a good strategy out going into the Q3 earnings, right, Brandon?
Perfect. I love it.
All right. Hey, well, thanks so much for all the insight. I know the users out there are loving it. I'm definitely enjoying it, going back and listening myself to learn as much as I can about these options trades going forward. So thanks for taking the time with us, Brandon. We look forward to talking to you next week and looking at some of your trades coming out.
All right. Thanks, Gavin. Appreciate the time.
All right. Take care. All right. We're just going to shut down audio here. Be back on in a couple minutes, and we'll be ready to go. We will be posting this to the page shortly, a replay of it. So if you missed anything, you'll be able to get a chance to re-listen to it.